Hello everyone and a very warm welcome to today's cryptocurrency update for Friday, March the 25th, 2025. It looks like we are getting closer to a bottom than to a top, and the low might actually already be in for Bitcoin. Ethereum, we're still thinking of a little bit lower before we will start to see a significant rally, and we'll share the ETFs for Ethereum and Bitcoin and Riot as well. So we believe that Bitcoin is most likely in this larger fourth wave, potentially in a 1 degree smaller fourth wave, whereas Ethereum should be in this larger second wave. Sorry, fourth wave here also. And ETHE might be in this larger second wave. Why is ETHE, the ETF that tracks Ethereum, different? Because of course it got launched at a way different time than Ethereum itself. So Ethereum should be in a larger fourth wave, which most likely also means that Bitcoin is in this larger fourth wave. All right, so that's the preferred wave count. And Riot should be in a larger second wave, which could be more protracted. We've shared that option with you before. So let's have a look at the charts. We're going to start off with Ethereum. And the first option is that we have indeed completed our correction. And we're still meandering in this box, the target zone between 1730 and 1970, and we're back in it again. So this could mean, for example, that we are still in a final little fifth wave, which I will share with you here, and that we've just topped for wave 4, and we're going to go for wave 5 to the low 1700s. All right, this way we can count for every single wave. We've topped here for a B wave here, and then the C wave is often 5 waves: 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, 5, 4 of course 3, then a flubber wave for wave 4, and now in wave 5 to the low 1700s. There's a lot of positive divergence going on the technical indicators. These are of course conditions, they're not triggers. Positive divergence can last for a long time. But it is evident, especially now with the recent rally, if we make a lower low, the MACD will make a higher high, which is often a very good sign of a low being in place. And then that's the other alternative. And let's see if I can pull up then the monthly chart here for Ethereum. Give me 1 second. And then you see that we've then completed this very complex, long drawn, as we call protracted fourth wave. Then we had wave A, B, C for wave A, and A, B, A, B, A, B, C for wave B. And now, of course, 5 waves lower for wave C. And after 4 comes 5, and we should target about 7,500 to 10,000 ideally. Getting quite oversold, so we got to give this time. We don't think the Ethereum cycle is done yet until probably early 2026, maybe late 2025. Ethereum topped out here in late 2017. It then topped out here in late 2021. So most likely we're going to top out again in late 2025. Then we have, of course, a 1, 2, 3, 4 year cycle, followed by another 1, 2, 3, 4 year cycle. Makes sense, right? And sometimes it really helps to just look at the ETFs that track the cryptos. They sometimes count a little bit cleaner because we have a little bit less noise. It's just the stock market times they're traded and not 24/7, 365. We have a 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, and we should now be in this wave 5 to about $13. That would be ideal. Also here we're really starting to see lots of positive divergence, which is really great. That is quite indicative often of a exhausting trend. In this case to the downside. And then of course you had your third of a third wave here, maximum weakness. Then your third wave was here, not as weak, and then our final fifth will be less weak. So then we get this nice positive divergence. All right. Same here for the MACD. The MACD is now to a buy, and it might not even give a sell signal anymore on the wave 5. Maximum oversold, and as you can see, money is starting to flow back into ETHE, as you can see here, right there versus here. So here versus there. Okay. See the difference? So at same price levels, money is flowing back in. So that's also a positive sign. From a this is a monthly chart perspective, we have then completed 5 waves up into 2024, and we're now working on 3 waves lower, an A, a B, and a C wave. So ideally to the 76.4 at $12, and then we get 3, 4, and 5. Of course, alternatively, this is A, this is B, and then this is C. And even a C is A relationship targets somewhere out about 32 plus 12 is $46. All right, well, we can go easily to 46, which is this high here made in 2021. It wouldn't surprise me. So once again, oopsies, once again, we have a lot of upside potential, around $30, and minimum downside risk. But no signs of a bottom being in place. I want to see a up month, and of course a nice 5 waves lower on the daily chart as well. That would be fantastic. Now we're going to move on to Bitcoin, but before I do that, I want to share an article by McClellan. He really likes to present correlations. Of course, correlation is not causation, but here we look at net short versus net long for non-commercial traders. Non-commercial traders in this case are large speculators, so think hedge funds, institutions, the smart money. And smart money is extremely net long Bitcoin. All right, it is as long Bitcoin as it was here in the fall of 2023, just before we got this massive uprun. It is even longer, more long than it was here in late 2022. So this is the smart money, and smart money is extremely long Bitcoin. Now, it's not ever an immediate sign of a low in place. These people can wait and see for a long time. All right, they have much bigger pockets and a longer breath than most skittish little traders. So please always try to follow the smart money. But you can see they have really liquidated their net short positions, and they were, of course, net short the most right here. The early 2025, and they've really closed those. So this looks really like we're getting close to a bottom. As Tom points out here, it is a condition, it's not a trade trigger. There's no guarantee that we'll see the same outcome as before. Of course not. 60% of the time it works every time, but this is quite a good additional point to the weight of the evidence that we're getting closer to a bottom than to a top. That is quite obvious. So we could still be in this leading diagonal where we just topped shy of the ideal target zone for wave 3. Remember, diagonals are extremely tricky, so please bear with us. And then we'll see probably a high somewhere at 92,000 before we see the wave 2. So this is option 1. However, we have a other option as well, where we then have the wave 1 already completed. Okay, 1, 2, 3, 4, 5. We're now in wave 2, which can go as low as around 79,000, and then 3, 4, and 5. Okay, so we should now be in this wave 2, which can go as low as 79,000. It doesn't have to. It can also stall here at 83,000. So we get something like this for the wave 2, 3, 4, 5, and that is just 1 of 5. We get a pullback for 2 of 5, and then it's off to the races. And I think if this is the case, then we are indeed in this final 5th wave, because we only have until the end of November to fill in all the waves, and then to also allow for another larger 4-5 sequence, which will take several months, is going to be a tricky one. So for now, again, we believe this is filling in this final 4th wave, and then we should see the final 5th wave to a daily 150, 166,000. And that would match reasonably well with the count I have here on IBIT. As you can see here, we can reasonably count also here a leading diagonal wave 1, 1, 2, 3, 4, 5, and all these waves are 3 waves. And we're now in wave 2. and the wave 2 can go as low as about $45.50, which is the start of this diagonal. Then we go 3, 4, and 5 to ideally about $59. That's wave 1, and then we get a pullback for wave 2, and then 3, 4, and 5 to complete, of course, eventually this larger impulse later this year. And then we'll be looking into the, I would say, low 80s to high 80s, somewhere around there. Also here, plenty of positive divergence developing, but it's a conditions, not a trade trigger. Again, we can also have this alternative that we will see a lower low. This is for BITO, just around $17. Okay, it's still possible. For the whole month, we're going to drip lower. Then this was just corrective price action as per the arrows, but also this will resolve higher. I have a very hard time counting it any other way than this will eventually resolve higher. The commitment of these commercial traders, the big boys, is of course quite convincing that they're also looking for higher prices, be it even for a bounce. It's quite rare for the really educated, smart money to be wrong on this. But again, they can easily sit through this tiny little fifth wave for 2 months. That they don't care because they have, of course, a longer term view than, as I said, the skittish daily day traders. So this is for GBTC, can also still go to about $60 before we see the wave 5. Moving on to Riot. Riot still needs a final fifth wave. Then we have 1, 2, 1, 2, 3, 4, 3, 4, 5. And if we go below 10 or 633, the 100% retracement, we are then in this protracted wave 5 of C of 2, and it should target anywhere between $5 and $7. All right, so we're getting awfully close to this one. Then we had a B, and then this ABC pattern where the C wave morphed into a 1, 2, 3, 4, 5 ending diagonal. And from there, we are still looking for at least $33. So the retrace is currently really deep for a second wave, but it's still not impossible. Okay, so then we have A/1 here, 2/B here, and we're going to get 3/C all the way up there. So it's still possible for these 5 waves to complete. Lots of positive divergences, as you can see. We might not even see a sell signal on the MACD anymore for this final fifth wave before we start moving back up. And again, this still looks quite constructive, be it even for this final fifth wave lower into the 5 to 7 target zone versus, well, we're going to bottom out really soon here as well. So those are really the general charts I have. I hope you appreciate sharing the fact that the commercial traders are seriously net long. You know, it's like up the wazoo. That is fantastic. This is, I think, a very strong signal. Look again, they were long here in the fall of 2023. And if we're going to zoom out here to the fall of 2023, it's right there. And then we got this. All right. We got a almost 100% rally. And this is where they currently are similar to. See that? There. Fantastic. So this strongly suggests get ready for blast off. I can share, of course, other people as well. We have the money flow, if you remember that the money flow still suggests we're going to have a blast off either pretty soon here, late March, which is currently, or in late April. So somewhere around there, plus or minus. Again, the commercial traders couldn't care about a month or so. If anything, it starts to look like we're probably going to go a bit sideways in Bitcoin before moving higher. And I expect the same for Ethereum, and therewith, of course, the same for the ETFs and Riot. And with that, I hope you appreciate this update. I hope I have explained correctly to you what my thinking is, what I'm seeing in the charts, and how we incorporate other people's views and data as well to match the Elliott wave with other objective data analysis. And with that, I wish you all a fantastic weekend. Take care, trade safe, and we'll see you all next